there's a couple of big tailwinds now, which lead me to think that there's a good chance Bitcoin could be at $1 million per coin, by 2030 or so.
And we have a market value in 2030 of 25 trillion.
There's a convergence now that's happening between AI and crypto.
Think of waking up to Bitcoin and Ethereum breaking records while most of the world sleeps through it. 87% of people are completely unaware, but savvy investors see the storm forming. Q4 2025 could redefine crypto wealth. Here's what you need to know before it explodes. Chapter 1. Rate Cuts and Market Shifts. In September 2025, the U.S. Federal Reserve made a significant move by cutting interest rates for the first time that year. This might sound like just another economic headline, but for crypto, it is huge. Lower interest rates mean traditional investments like bonds or savings accounts yield less. When returns on conventional assets shrink, investors naturally look for alternatives, and digital currencies like Bitcoin, Ethereum, and top altcoins become prime targets. Think about it this way: when the tide goes down, all boats rise. A rate cut is that tide dropping, and cryptocurrencies are the boats ready to lift. Historically, whenever the Federal Reserve loosens monetary policy, risk-on assets tend to experience strong inflows. In other words, this isn't just speculation, it is backed by market trends. Traders call this the calm before the storm, because after such macroeconomic moves, price action tends to accelerate dramatically. This scenario sets the stage for a possible explosive Q4. Investors who recognize the pattern early could position themselves ahead of the wider market, which often reacts only after the news is widely known. Chapter 2. Bitcoin's meteoric rise. Bitcoin is the undisputed king of the crypto world, and its recent movements have turned heads. The cryptocurrency recently surged to $116,526, marking its highest price in a month. But analysts are looking beyond this, forecasting a potential rally to $150,000 in the last quarter of 2025. Why such optimism? Institutional money is flowing in at an unprecedented rate. Hedge funds, investment firms, and even sovereign wealth funds are allocating significant portions of their portfolios to Bitcoin. This is not just speculation, it is measurable demand. Combine this with favorable macroeconomic conditions, and the ingredients are set for a breakout. Think of Bitcoin as digital gold. Its supply is capped, demand is rising, and scarcity paired with increasing adoption almost always drives price appreciation. Even small shifts in investor behavior or macroeconomic indicators can translate to large price swings. Watching these dynamics carefully could be the difference between catching the wave early and being late for the party. Chapter 3. Targeting 5,000. Next up, Ethereum. If Bitcoin is digital gold, Ethereum is digital infrastructure. Ethereum isn't just a currency, it's the backbone for decentralized finance, NFTs, and now even AI applications on the blockchain. Technical indicators are flashing bullish signals. Price targets? Analysts see Ethereum possibly hitting between $4,000 and $5,000 by the end of 2025. But adoption is accelerating. Institutional portfolios are increasingly adding Ethereum exposure, not just because of its price potential, but because it's a platform for real-world innovation. Think of Ethereum like owning a skyscraper in a booming city. You're not just betting on the building, you're betting on every business that rents space inside. The more applications and platforms that run on Ethereum, the more valuable the network becomes, and that reflects directly in its price. Chapter 4. A $255 million inflow. Now let's talk about Solana. Over the past 24 hours, the blockchain network has seen over $265 million in stablecoin inflows. This is a major signal that confidence in Solana's ecosystem is growing rapidly. Stablecoin inflows are crucial because they provide liquidity to decentralized applications, decentralized finance platforms, and cross-chain transactions. With more stablecoins circulating on Solana, developers can build more scalable applications, which in turn attracts more users and investors. Think of it like adding fuel to a rocket. Solana is the rocket, and the stablecoin inflows are the fuel. The more capital flowing into the ecosystem, the higher the potential trajectory for adoption and token price. Solana could soon become a major contender in the blockchain world, especially in niches where speed and scalability are crucial. Chapter 5. Polkadot's deflationary shift. Polkadot has made a bold move by capping its DOT token supply at 2.1 billion. The network is transitioning from an inflationary model, where new tokens are constantly minted, to a deflationary model, where scarcity is built into the protocol. Why does this matter? Scarcity tends to increase in value. As the circulating supply decreases or remains capped while demand continues, the token's price could rise over time. This is similar to collecting limited edition items. Once production stops, collectors compete over what is available, driving prices up. Polkadot's capped supply is like creating a digital limited edition asset in the crypto market. For investors, this signals a new phase for Polkadot. Not only has it become more valuable as a long-term store of wealth, but it also attracts projects and developers who want to build on a network with strong tokenomics and clear value appreciation potential. Chapter 6. Dogecoin's institutional adoption. Let's start with Dogecoin, the coin that began as a meme but is now stepping into serious territory. CleanCore, an institutional investor, recently acquired an additional 100 million Dogecoin, bringing its treasury to over 600 million Doge. That is massive. Why does this matter? Institutional adoption signals legitimacy. When professional investors start allocating hundreds of millions of dollars, Dogecoin is no longer just a joke coin. It is increasingly recognized as a digital asset capable of storing value and even acting as part of broader treasury strategies. Think about it like this. When a well-known investment firm buys a rare collectible, it instantly gains credibility. The same principle applies here. Dogecoin's growing treasury could encourage more companies and funds to explore allocations, potentially driving further demand. Dogecoin's story is a perfect example of how community-driven projects can evolve into serious financial instruments. Early adopters who held on during the volatile years are now seeing institutional players validate their faith. This adoption is not just about price appreciation, it's about legitimacy, trust, and positioning Dogecoin for the next stage of growth. Chapter 7. Bank of America's stablecoin strategy. Moving on to one of the biggest traditional finance moves of 2025, Bank of America is actively preparing to launch its own stablecoin. Following the passage of the Genius Act, the bank forecasts up to $75 billion in potential stablecoin supply growth. Stablecoins are digital tokens pegged to traditional assets, usually the US dollar, allowing for fast, low-cost transactions on blockchain networks. By entering this space, Bank of America positions itself at the forefront of the digital currency revolution, bridging traditional finance and decentralized finance. Think about it like a giant bank stepping into the crypto world with its own bridge. They are creating infrastructure for massive flows of capital to move seamlessly between traditional and digital financial systems. For investors, this signals that mainstream adoption is no longer a maybe, it is happening. The implications are huge. Once major banks like Bank of America actively integrate stablecoins, it paves the way for other institutions to follow, creating a network effect. This could lead to greater liquidity, lower transaction costs, and more widespread adoption of blockchain-based financial services. Chapter 8. A game changer for institutional investors. Next, let's talk about Bitwise and its Bitcoin ETF. ETFs, or exchange-traded funds, allow investors to gain exposure to Bitcoin without actually holding the cryptocurrency. This is huge for institutions that may face regulatory or custody restrictions. Bitwise's ETF provides professionally managed, low-cost access to Bitcoin, making it simpler for pension funds, endowments, and investment firms to enter the market. This can create significant upward pressure on price, as institutional inflows tend to be substantial. Think of it as an express lane into Bitcoin for large investors. Instead of navigating the complexities of wallets, private keys, and exchanges, they can gain exposure through a traditional investment vehicle. That ease of access can accelerate adoption, bringing new capital into the market that previously may have been on the sidelines. Chapter 9. Sovereign wealth funds embrace Bitcoin. Finally, let's discuss sovereign wealth funds and their growing involvement in Bitcoin. Norway's sovereign wealth fund increased its indirect Bitcoin exposure by 191% over the last year and now holds over 7,161 Bitcoin. Why are sovereign funds investing in Bitcoin? The answer lies in hedging. Macroeconomic instability, inflation, and currency volatility make Bitcoin an attractive store of value. By allocating even a small portion of their massive portfolios, sovereign wealth funds are acknowledging that Bitcoin is not just a speculative asset, it is becoming part of global financial strategy. Think about it like a country holding gold reserves. Bitcoin is digital gold, and these allocations act as a protective layer against economic uncertainty. This trend could encourage other large institutional investors to follow suit, potentially increasing demand and strengthening Bitcoin's position as a mainstream asset. With institutions piling in, regulations aligning, and macroeconomic factors favoring digital assets, Q4 2025 is shaping up to be a historic quarter for crypto. Are you ready to ride the wave, or will you be left behind? Drop your thoughts into the comments below. If you find this video insightful, don't forget to like, subscribe, and hit the notification bell for more in-depth crypto insights. Disclaimer: this video is for educational and entertainment purposes only and does not constitute financial advice. Cryptocurrency markets are volatile. Always do your own research and consult with a licensed advisor before investing.